Yeah, good morning, everyone. So yesterday again, US market continued its rally for the third day, mainly again driven by a few good results which has supported the market, specifically Tesla, which has come up with a result which was ahead of expectations. Apart from that, people are optimistic about the Apple result also, and as such, market was in positive mode. Yesterday, even ECB came up with rate increase, and that was a hit more than expected at 50 bips, which was the expectation was 25 bips. So that has created some volatility in the dollar index, but ultimately it stabilized. Apart from that, Asian markets are more of positive, marginally positive, but futures of US markets are negative. Even in commodity, oil though declined during the day, but now is down by around $1 from yesterday at 105. And even today, iron ore is up by around 3% in China, and also steel is up by around 1% in China. So overall, seems more of we will see sideways movement in the market for today's in India. Well, I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. Yesterday saw that Nifty sustained the 16,600 level. We already mentioned Monday that Nifty trading towards 16,600 is the first immediate resistance level. So you see that yesterday we saw that Nifty closed that important resistance level, but we see to today to sustain the weekly closing above 16,600. Then we expect further rally towards 16,800, 900 and upside in next week. If Nifty managed to close below, not sustain above this level and trading below the 16,500, then we see some profit booking and maybe fall towards 16,300, 16,170 at downside. So today's weekly closing is more important for today. If Nifty sustained above this level, managed to sustain 16,600, 16,670 and upside, then we see the further rally towards 16,800. Bank Nifty also face immediate resistance around 36,400. The Bank Nifty close upside, we expect next important resistance is 36,800, 37,000 and upside, and support place around 35,950, 35,700 at downside. Nifty Finance also facing important resistance. That's around 16,400, 16,440 and upside. If close above that level, then we expect 16,500 next immediate target for Nifty Finance, and support place 16,240 at downside. Stock specific, we see the positive in Godrej property process, and we already mentioned yesterday's report in Motherson Sumi. We are looking for this 1 to 2 trading session in positive side. L&T also looks positive. We already mentioned last few trading session L&T in buy side. So we expect further momentum will be continue. Next immediate target for L&T in 1800 and 1820 and upside. Support place at 1730 at downside. Godrej property also looks positive at current level. We see the last 1 to 2 week in uptrend in Godrej property. Yesterday managed to close above 100 DMA. So we expect further rally to be continued towards 1520, 1540 in upside. Support place around 1400 and 1390 at downside. That's it for technical. Derivative I can get.
Yeah, thank you, Vikas. Good morning, everyone. So as per derivatives data front, we are seeing that Nifty has seen a strong rally in yesterday's trading session. While around as per the Y position, almost at 16,500 and 700 level, almost around 7 to 8 million positions of Y got added around those two strikes. And on the upper end, still we are seeing that 16,600 is holding highest OI call rotators position on the monthly basis. So 16,600 will act as important position resistance level. Once if in today's trading session, if Nifty sustains about 16,600 level for some time also, then we might expect expect the position to get shifted in the upper end towards 16,800 to 17,000 mark. So today's closing would be very much important. 16,600 closing is very much important for the next week rally to get continued. Currently, as per in yesterday's trading session, the positive thing we have witnessed is the sectoral specific and the stock specific buying was very healthy in second half. So currently, we expect the same momentum to get continue in today's trading session in the first half. While PCROI yesterday closed at 1.48 level, so still PCROI has around 0.12 to 0.15 basis point on the upper end to get a momentum, while the resistance is fixed at 1.65 to 1.68 level on the upper end. So till the time PCROI is sustaining about 1.40 level in today's trading session, till that point of time we might expect the market to get a stable buying in today's trading session. Another positive factor which we are seeing is FIs. FIs are continuously into buying trend from last 1 week. So this is a positive scenario. We are seeing this after a long time. So currently the support which we are getting from the FI also till that point of time, all the derivative data front we expect the positive momentum in the market. So you should currently hold your long position with the support of 16,500 level. Once 16,500 gets broken on the lower end, then you might expect another fall of 150 200 points on the lower end. As per stock specific and sectoral specific, we have seen the specialty chemical sector has seen a major rally in yesterday's trading session. Almost major stocks gave a strong rally on the upper end. While from that selective counter is SRF and Deepak Nitrate, this two counter looks positive in today's trading session. Also, another counter which we are seeing that the strong buy positions are getting added up at the nearest strikes are M&M Finance, Coromandel, and Ken Bank. These three counter have seen major call data positions getting added up. So you should create long position in this counter. Expect a strong momentum in next 1 to 2 trading session. That's it from the derivative front. Thank you.
Good morning. CSB Bank result has improved. The credit cost was almost zero for the quarter. Slippage was at 0.9%. This is less than 1% now for the second consecutive quarter, which is encouraging. And GNPA was flat at 1.8%. Only issue with CSB is that bank is not growing as one would expect. Sequential growth was at just 2% in June quarter, which is below even the banking system growth. Bank is not able to grow its non-gold book, which declined sequentially. Bank expects to remain in investment mode and is creating specific product suites for the retail segment, and only post that it will accelerate retail growth, which will be after FY24. So that is why we feel that in the near term the outlook is neutral, although in the long term it is positive. RBL Bank result was in line with expectation. There was a lot of expectation of a turnaround and sharp improvement here, but that was not the case. The operational performance deteriorated because of declining NIMs as well as higher OPEX. The NIMs are likely to be flattish to negative going forward, and OPEX is expected to remain elevated in the near term. We believe this will lead to downgrade in earnings for RBL, and loan growth was also subdued at 7% year on year. Despite this, management is confident of delivering 20% loan growth by the end of the year. Asset quality was mixed bag with credit cost declining. However, the slippages remain elevated at 4.3% against 4.1% in March quarter. So slippage is a key monitorable going forward, and overall we expect RBL to deliver ROA of between 0.7 to 0.8% for current year and next year, and which is similar to any other average PSU bank. And therefore we feel that we are neutral from near-term perspective, but long-term there is potential if the bank manages to stage a healthy turnaround going forward. Canfin Homes result was above expectation, mainly because of provision write back of 4 crores against expected credit cost of 20 crores. GNP and NNPA both were flat sequentially. Loan growth was strong at 24% year on year. However, this is more to do with the low base effect, and if we see on quarter basis, it was 3% growth. Disbursements have slowed down in Q1 to a run rate of 1700 crores against run rate of almost 2600 crores, which we saw in Q3 and Q4 of last year. So we feel that loan growth can still be at around, on a sustainable basis, at around 18% going forward. Stock is trading at 2.2 times trailing price to book, And we remain positive from near-term as well as long-term perspective on Canfin. Once we get more clarity on the audit being done by Canara Bank regarding a small fraud which came to light few months back, because of that reason, the stock went range-bound and lagged since last few months. We feel once that is out of the way, then stock can move much higher from current levels. ICICI Securities result declined as expected. Fee and commission income as well as EBITDA declined by 15% quarter on quarter. In comparison, Angel's decline was at just 1% and 5 paisa at 8%. So we are seeing that the market share shift towards the discount broker is continuing, and we are neutral on ICICI Securities. Rajratan Global Wires as an auto ancillary company result has improved and was in line with our expectation. Sales grew 38% year on year, but 2% quarter on quarter, and EBITDA also grew healthy at 46% year on year, with margins expanding by about 1% to 21% now. Capacity in Thailand was supposed to be expanded from 40,000 tons to 60,000 tons in quarter one. And this increase in volumes should reflect from quarter two onwards. Similarly, capacity expansion in India was also likely to happen from 60,000 tons to 72,000 tons. That will also commence in quarter two. So we feel quarter two, there will be a good sequential growth in top line as well as bottom line. So although earlier our target was what the current market price is, but we think that because the near-term earnings momentum will be strong in Q2 and Q3, we think one should continue to hold for a target of 1,000 rupees, where it will trade at 28 times FY24 in line with other quality auto ancillary companies. Thank you.
Good morning, everyone. Quick Hill Technologies has posted decline set of numbers both on the revenue and the margin front. However, the company has announced buyback of rupees 150 crore at a price of rupees 300 on proportionate basis. Current market price for the company stands at rupees 199, which is positive to the company. Cient has posted in line with expectation set of numbers for the quarter. For FY23, management has guided a revenue growth to be in the range of 13 to 15%. The company will add further 6 to 7% in revenue due to acquisition. The guidance for inorganic growth does not include Scitech acquisition, which is likely to be closed by Q2 FY23. For full year, EBIT margins is expected to be in the range of 13 to 14%. The Q1 FY23 EBIT margins for the company stands at 11.5%. Outlook is neutral. Emphasis has posted in line with expectation set of numbers for the quarter. Dollar revenue came in at 435.9 million and EBITDA margin came in at 17.6% versus QOQ of 17.6%. Coforge has posted in line with expectation set of numbers for the quarter. The firm has upgraded its annual revenue guidance to grow at least 20% in CC terms from earlier guidance of around 20%. EBITDA margin guidance has been the same at 18.5 to 19%. Stock is trading at 21.6 times FY24 EPS. Persistent has posted above expectation set of numbers for the quarter, both on the revenue and the margin front. Stock is trading at 25.9 times FY24 EPS. Happiest Mind has posted improved set of numbers for the quarter. Stock is trading at 46.2 times FY24 EPS. Thank you.
Yeah, good morning. Hindustan Zinc result was above expectation. Revenue came at rupees 9,387 crores versus expectation of 9,092 crores. EBITDA came at 5,137 crores versus expectation of 4,949 crores. Management has guided its metal volumes to be in the range of 1 million ton and silver production at 700 to 725,000 ton for FY23. Volume declined quarter on quarter owing to lower ore production and overall metal grades. The company expects the cost to remain on an uptrend Q on Q given higher cost of imported coal. However, it expects to partially offset this increase from internal efficiencies and higher volumes in FY23. Power cost is expected to moderate on higher linkage coal supplies in the coming quarters, and has guided for zinc cost of production to be in the range of 1,125 to $1,175 per ton. Capex for the current year is expected to be around 250 to $300 million, which includes growth capex at 125 to $150 million. For FY23, the company has hedged 20% zinc volumes at $4,100 per ton. These are front loaded with 50% in the first quarter and the remaining 50% in the second quarter. We are neutral on this company. Sagar Cements had its con call yesterday, wherein management has guided to achieve 5 million ton of sales volume in FY23 with incremental sales will be led by recent incremental capacity addition. However, volume in Q2 is expected not to be too high due to monsoons, whereas input costs are likely to be flat Q on Q. The company is facing demand issues as it dropped in the first 15 days of July as compared to June. Demand seems to be a challenge in the near term. However, we are positive on a long-term perspective. Company took a price hike in July up to from 5 to 10 rupees per bag. So we are positive on a long-term perspective. Thank you.
Yeah, SRF has reported the numbers, and numbers were marginally ahead, wherein chemical business continued to do well, which has increased, revenue has increased in chemical division by around 9% quarter on quarter, whereas year on year it was up by somewhere around 55%. And the margins quarter on quarter was slightly lower from all-time high of 32% to 31%, whereas last year the margins were quite low at almost around 20%. So there is a substantial increase which has happened last quarter, and the company continue to maintain its momentum in this quarter as well. But apart from that, the other two division though has performed well, but company has given some conservative outlook for that. That is packing film division, where in company expect that they are seeing some slowdown, though this quarter result was good. And also the technical textile division, which is they are seeing some softness in the domestic market, but they are using this capacity for the international market and are able to maintain the profitability. So overall, the results was marginally ahead on account of better result in chemical division. Apart from that, GSFC has come up with good numbers. GSFC fertilizer division specifically has done very well, and that has led to a revenue growth of around 63% year on year, and EBITDA also increasing by around 161% year on year. EBITDA margin came in at around 17% as compared to 11% last year. So, and the stock is trading at around 5.1 time TTM EPS. So looks good from the current level. Then Kajaria Ceramic come up with the number, and the numbers were ahead of expectations. Results has shown improvement with year-on-year increase of around 80%. Quarter on quarter, March quarter is generally very heavy quarter, and from there we will see some decline of, we had seen some decline of around 8-9%. But the key thing is that the margin has shown improvement quarter on quarter at 15.2% versus 14.1% last year, versus expectation of 14.1%, and last year same quarter 14.3%. So results was comparatively positive for Kajaria Ceramic. Then CEAT management has given positive outlook for the for the sector. Though the result was this quarter, the margin declined quarter on quarter, mainly because of the raw material prices increased higher than the selling price. They had taken the hike, and even in Q2 also they will see margin raw material price further increase because of the higher inventory which they are carrying, and the price increase they had taken in June, in July month, which will partly compensate, and the management has indicated that they will be taking higher price increase in the August month. But apart from that, what they see that the decline in the recent past of the commodity will get reflected into Q3 results, where the situation can improve substantially, and also the higher increase in prices in this quarter will help it to improve the margins in the third quarter. So overall, from a bit longer term perspective, outlook is positive. They had given very positive commentary for the demand. The demand side is robust. I'll request commodity team to take up first.
Thank you, sir. Good morning, everyone. Yesterday we had seen a dip in commodity breaching the support level in gold, silver, but some of the closing on closing basis it has maintained above 50,000 to 50,100 in gold, 55,000 in silver. So as long as these levels are holding, one can buy on dips at the support level, maintaining a stop loss, small stop loss below it. So one can expect prices to test gold in 50,500, 600, silver 56,000. Crude also, if prices sustain 7,800, one can go along with a stop loss of 77.30. Prices again can test 79.50 levels. Copper tube is expected to trade in the range of a broader range of 615 to 632. However, one can buy around 620 with a strict stop loss of 615. That's it from me. Ria can take over from here.
Hello everyone, Ria here. So let's look at the currency headlines for today. So as for the ECB, the major event that we were looking forward with, they raised the interest rate with the 50 bips, taking the ECB rate to 0%. So they are at neutral right now. It was quite an aggressive rate hike, considering that the market was expecting the rate hike to be anywhere between 25 to 38 bips. So I think the major reason for the ECB to arrive at a 50 bip rate hike was on the back of the Euro USD testing the parity levels, as well as the inflation, high inflation in the region. Going forward, I think if you look at the Euro USD, it has been trading around 1.1 levels, and it will continue to do so in that region, because apart from the inflation, the statement that has been coming from the ECB, inflation will continue to remain on the higher side for the current year, and the pressure will be seen into the Euro USD as well. The political unrest in the Italy continues to be a denter into the Euro USD. Apart from that, UK inflation numbers have come in. It has come on the higher side. It is right now at a 40-year high, around 9.4%, and it will continue to do so. These statements that has come from the Bank of England is it could test the level of 11%, and this is another bad news for the Euro region. So all in all, I think the same could be seen into the dollar index as well, where it went around 107. In the yesterday session, it is settling around 106.85 levels. For the dollar index, I think it will remain on the higher end, and will continue its strong hold considering the political unrest in the Euro region, the inflation numbers around the globe, and the anticipation of Fed again going for a rate hike. Even for the Bank of England, the anticipation for the rate hike that after doing 25 bips rate hike, it is not putting much of the dent into the inflation numbers and it is continuing to be growing. So next in the August, we could expect Bank of England to go with a rate hike of 50 bips. For the Indian rupee, I think Indian rupee will likely to depreciate with the dollar remaining on the stronger side. However, like we have said into the previous morning meetings as well, the depreciation will be capped, taking into consideration that the cool off that has happened to the dollar index, the crude oil prices cooling off, and of course the slowing down in the FII selling. So all these would put the range into the dollar index around 80.40 to 79.70 levels in the coming sessions. In the intraday sessions, I think it will likely to consolidate. If it breaches the support of 80.15, it could see the higher side, but more likely the consolidation will continue in today's session as well. So that's it for me. Thank you.
That's all from us. Thank you very much.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.